Good evening, everybody. This is Jeff Scott. It is 9:16 p.m. on May 5th, 2013. I'm planning on doing a rather abbreviated show tonight. For those who will be unhappy because I fly through my analysis and don't tell you all the steps I take to get there, just take a look at the one I did last week, dated 4/28, which was a very long one that I did live. I take my time to go through and talk about what I'm doing. For those who are regulars, I know you'll appreciate the quick version instead of my usual verbose, lengthy one that you've heard multiple times. However, I will go through a couple introductory slides. Everybody knows we're hitting new highs. So the question becomes, are we in the middle of a blow-off top, or is this something sustainable, driven by economy not as bad in the U.S. as expected, and Europe bad, giving rate cuts. Regardless, we saw two very powerful weeks of the market. Educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker, and I use multiple different programs. I'm not affiliated with any software vendor, and at least yet, I'm soon to be retiring from my regular job, and I hope to have some interesting news in the next couple of weeks. Everything I use I pay for. I travel a lot, but I don't go to too many desert isles. But if I did, if I could get internet access, then I would use either TradeStation or Thinkorswim for my real-time charting. In trading, I use HGSI for my analysis. EdgeRater is a great adjunct to HGSI, uses HGSI data. Having trouble logging into it tonight, so I may not be able to show you that typical analysis, but you could suffice it to say it's getting overbought. I use seasonal analysis with Magenta, and I'm a big fan of Woodward and Brown investing. These are my influences. I'm not going to spend any time. I do it every week. Websites are there below. My favorite of all, Ian Woodward, has said over and over again, he's not a guru. He teaches you to be your own guru, and I think that's the best advice anybody can give you. Learn from the people that you think are great teachers and your masters, and then once you master them, then you can teach others. And I've tried to learn from Ian Woodward, Ron Brown, Alexander Elder, Van Tharp, Morales and Katcher, O'Neill. Bigelow is my candlestick person that I like to watch and listen to. And Ron Gronke is for that person who is a retirer that's concerned about income and not getting it in their bank account. He's got some great techniques with cover calls and naked puts. I make the mistake of calling a lot of things potential buys. We're going to find setups tonight, things that I see that are compelling. I do it with a top-down approach, but sprinkle in some other things that I do, shortcuts. But what I do tomorrow depends on the market and the sector. So I'm not identifying triggers. I'm identifying setups, and during the day I use multiple time frames. The type of trader I am, for those who don't know me, is I am on the road still working full-time for a major public corporation. I thus cannot be sitting at my computer all day trading. I like to automate things. I spend my nights identifying what I believe is a trend of the market, what are the leading sectors and the leading factors in those trends, and then I put in a lot of contingent buy and sell orders. Duration of my trades, I start off as a swing, but I sometimes become a position trader. I didn't say buy and hold, because a position trader that forgets to watch his positions becomes a buy or hold. Buy and hold investor. All my positions have some type of a stop attached to them, and whether that stop is an automated trailing loss, a more, to me, interesting chandelier trailing stop, or perhaps that it's driven by major moving averages or other, the driver of what got me into the trade. If I fail at that point, is usually why I want to get out. As always, I go from the top down, and then I use shortcuts. Again, this will be abbreviated tonight. And, last week, or 2 weeks ago, we pulled back to the 50. Last week, we broke out. And on this talk last week, I said we're either going to go take new highs or come back down to the 50. We had one head fake early in the week, but we took out the highs, as we'll see in a few minutes. Ian Woodward and Ron Brown are the gurus that I really talk a lot about and follow very closely. And just for the sake of completeness, for those who don't know highgrowthstock.com, that's the website address. Let's see if this works. And just free trial, 30 days on our thing called the Learning Center, where you can find a lot of information about getting started, add-ons, which are some of the files that make yours look like mine. Ron Brown puts an excellent, very much more short and to the point review, usually up on Saturday morning, probably more focusing on HTSI and some of the thoughts rather than on stocks to buy. And then I try every Sunday night to put something up like this, although this will hopefully be a shorter one than normal. And you can see, you can download the one from last week right here. It's extremely long, but I think it was fairly valuable. In addition, you can go back, and I've got these going on forever. You can see some of the bad picks I make and some of the good picks. And lastly, on the website, all the stuff is free. You notice I didn't log in. Is Ian Woodward's blog, outstanding blog. You can see latest breakout to new highs in the market, one-day wonder, the real thing. And he goes through a lot of different indicators and, as he calls, mumbo jumbo, to give us an idea and of whether or not we continue to run, or are we, at the end of the run. I'll let you read that on your own. So on that note, be your own guru. Make sure you have the right employees, which to me are tools and software for your trading business. Keep learning, and I never stop, and trade the market we have, not the one we think we have. And so many gurus think that this market is topping and time to get out, but I've heard that now going back to the middle of February. I just want to put this up here, not to go through it, but when I do my review of charts, this is what my chart looks like, and I know it's busy. There is a handout attached to you go into the HGSI website, go into support, Learning Center, actually reports, I'm sorry, my weekend review. There is actually a handout that will show you this slide and go through the different things that are in this. The top are momentum indicators called bongos and force. I like to see the long-term one be one direction. I look for the short-term one to shoot the other direction, and that tells me that I have a retracement in a downtrend or a pullback in an uptrend. In the middle, the one here with the red, yellow, green, that's an accumulation distribution measurement. This is a proprietary indicator called the high jump, which measures extension of the market. When you hit the top of the high jump, markets have a tendency to pull back. Overlaid on that are some of the David Elliott indicators, which I learned through George Lee, green candle lows and red candle highs. The next bar down only shows one thing, which are Morales and Katcher viable gap ups. Here we have DI crossovers, up green, down red. In the chart window, you'll see candlesticks with an 8-day exponential, a 17, a 50, and a 200 simple moving average. The pinks are pocket pivot down. The blue are pocket pivots up. And if you look down below, you see two rows of volume bars. They're the same volume bars, but sometimes they get lost behind the indicators. The top row of red and green, those are an indicator on the NYSE called the Eureka and the Phoenix, and they measure the market as a whole. And the bottom bar are kahunas, which measure another measurement of momentum in the stock. What I really like to see are three. And I don't want to say the power of three because that's a very smart person, Fred Richards, says that. But I like to see, as a buy signal, a kahuna, pocket pivot, and a crossover, or 2 plus a viable gap up. And in fact, if you look at this stock here, and it's not going to show well, this was a buy for me. Oh, I hit that one too many times. When I saw crossed above the 50, but more importantly, I had a DI crossover, a pocket pivot, and a big kahuna. And I'll scan for those triples, and those are things that I like to buy, one of my shortcuts. So enough of that. Let's take a look at the market. So as I've already stated, and let me see if I can get into EdgeRater, or if it's still, I think the server must be down. in Seattle. Boots up fine, and I had the same problem with multiple computers. Yeah, it's not logging in. All right, well, maybe I forgot to pay to update. That's possible too. I like to look at various sources to get an idea of what the market is doing. And those who have been watching this probably are aware that I've had a lot of concern that there's been a lot of divergences in this move up, and that MACD divergences could indicate weakness in the market and demonstrate a top. And the only reason I want to put this here is the NASDAQ has green daily, weekly, and monthly, so I know that I'm allowed to be long in this market, although it's clearly outside the envelope, which tells me it's at high risk of pulling back. But more importantly, or breaking out to major top, we've got higher highs on the MACD. So on the histogram, we've finally taken out the prior highs, and we're almost there on the line. So perhaps we are negating the MACD divergence, which I've been talking about on several calls. That would, to me, would be a very bullish thing in the market from a big perspective. Very quickly, the Dow, again, big move up, take out recent highs above the envelope, turn positive on the MACD, still has a ways to go to prove that we don't have an ongoing MACD divergence there. And if I look at the S&P 500, you'll see similar findings of a market that's moved out to a multi-year high. I mean, this is kind of fun. I forgot what it was like to be in a rousing bull market. Again, above the envelope, green on all three indicators. Will be interesting to see if we break our pattern, but you can see we've already taken out, at least on the histogram, the highs of the last run-up. So that's important to me because that might be an indicator that says that this isn't going to be a short-lived rally. To give you an idea of the strength of the market, I have about 800 stocks that I put into a radar screen, and I track them for many things. So this line here are pocket pivots. So by my analysis, using my indicator that I had built for me, or was given to me, I think, by somebody else on this one, so excuse me for that. I have about 190 pocket pivots out of the 800 stocks that I follow. That is exuberance in the market and the kind of thing that might make one concerned about getting towards a blow-off. And that's what I thought would happen, although I don't know if we're there yet. We might get a few more days up before we're done. You could see pocket pivots in many of the 3X bull direction ETFs. And if I look for Bible gap ups in that group of stocks, not only were there a lot of pocket pivots, but they only count for me, in my mind, if they're green. 1, 2, 3, 4, 5, 6. About 25 Bible gap ups. And what I've looked here is how big the gap is, and I can vary that criteria. A minimum volume, and you can see you have to be over at least 100% of your average volume, and I can titrate that up or down. And then this green or yellow here is going to be whether or not you're above the 50-day moving average. So lots of Bible gap ups, lots of pocket pivots, indices breaking out to new highs, pocket pivots in the 3X directions, pocket pivot on the Qs, the spiders, the Dow. This was and is an extremely powerful market. And sometimes you may think it's time to pull back, but I don't like to get in front of a freight train. Another thing to look at the power of the market is to look at how the market performed last week. So I take all the stock lists that I had the prior week, and I look to see those that I had on Friday last week, how they performed from close of Friday last week until close of Friday this week. Now, I trade several things during the week, so my performance sometimes reflects closer my buy list. But just to show you a number of different things, how strong was this market? The S&P 500 was up 1.31%. If I had left the stocks in my portfolio that went into Friday a week ago and didn't touch them all week long, they were up about the same. Interestingly, only 55% were up. Now, again, I do trade, and my portfolio doesn't necessarily look the same week to week. Very few things were negative, or red candle highs were negative. Red candle highs at a high jump were negative. And as you could see, there were some really big standouts. My Tim Higgett filter, or Tim's filter that I call the Tim Higgett filter, 3 stocks, kind of curious what was in those, so we'll go down here. Regeneron and Lionsgate. Regeneron was the star of the week, up 23%, and that was one of the ones that we picked when we went through. These are HGSI marketplace because you got Higgett, you got top 5 from Smart Groups, Delta Earth Crash, Best of Woodward and Brown, top Robert Bongo stocks, HGS 100, all up over 3%. My buy watch, which I put together with a ton of work over the weekend, was up 2.35%. Interestingly, my group inclusion filter top 30, or in this case 29, which I showed how to do at the end last week, was up 2.45%, 23 to 6 winners. Just showing you that those shortcuts that I talk about, looking at the GIF, looking at the Best of Woodward and Brown, they work. And frankly, I like to also see the strength here at the top were all things breaking out. Breakouts, extended, and gap ups were some of the things and the stocks that I had found that were leaders. So a lot of money to be made this past week. IBD 50 also up well, 2.88, a little bit behind the HGS 100. In a rip-roaring positive market, the HGS 100 usually outperforms. In a falling market, the IBD 50 does better because it's a narrower market and has less questionable stocks. Let's go look at this GIF All-Star. So I already looked, and it's 644. So let's just see what are the stocks that we looked at last week, get an idea of where some of the strength was. This test is called the Group Inclusion Filter. And what it does is it just looks at an equal dollar value, I think, of 5,000 of each stock and what they did. So we looked at several of these last week. You go back and you can look at, you can verify that. But Regeneron, the star of the week, up 23%. 23% on a stock that went into the week at $215. One of my stocks that I own is Perion Network. I own Regeneron. Perion was up 9%. It had a big move. They make IncrediMail, which is and I believe they do sort of stuff that they sell to Google. FleetCor Technologies, which is, I guess, as much as anything, is a credit card for the trucking industry. As you can see, it was up 6.5% on good earnings. Lionsgate, Nexstar Broadcasters had another good week. Celgene bounced back up 2.68%. A lot of the same old players had big moves. Biogen IDEP was down 2%, but they had a huge run-up the week before. On some of the stocks that I had looked at, or that we, as my buy watch, I think it's 644. Let me see if I can find that. 694. Yeah, my buy watch, which I created a lot of this while we were together last week. You can see CalAmp was another big performer, up 12% over here, actually 11.62%. Gilead, we talked about that being a steady performer, was up 8%. So just to give you an idea of the strength of the market, but more importantly, a lot of strength in the types of stocks that we look at. And we'll talk about the group inclusion report at the end. So market strong. I won't spend much time looking at major market indices because I think there's not a whole lot to say. So let's just jump into the one that I think is most representative, and that's the S&P 1500. And so on a top-down view, ranking the strength, you can see small caps had to move up compared to the last couple of weeks. Volatility continues to be crushed, as is gold and silver. The dollar was down a little bit for the week. But the small cap 600 up at the top. If I look at 5-day performance, NASDAQ 100, NASDAQ Composite, oil, small caps, all performed up about 2%, and volatility was down 5%. So strong week in the market. The combo ranking, for people that don't know, this is a specific ranking module that gives some credit to up over the last 3 to 4 weeks, but most important is the last week. Take a look at that S&P 1500, and you'll notice the things that you saw on my PowerPoint for what's in my chart. I'm going to shut down the fundies. And last week we talked about, does it pull back? That would be the worst case scenario, or does it go to new highs? And you could see it's had an 8% pullback here and a number of small pullbacks, and we just got about a 1% pullback, and the thing continued to take off. So I look at this and I see something that's breaking out to new highs, extremely bullish. The question becomes, what is a bull off top and when will we be there? This high jump is not up at the top, but it's getting close to the top, and that's telling me that we have a market that's come a long way. And what will happen to me if we perhaps go to a 45 to a 60-degree angle up, 3 or 4 days, get even more extended? That would be a blow off top in my view, and one that maybe we'll see. But these are lines that I drew last week talking about, are we going to be range bound or break out? And you could see it took most of the week to do it, but we broke out on Friday. So the market is extremely strong, due a pullback. I've been saying it's been due a pullback for ages, and until I get the pullback, I still have to be pointing towards bullish, with the asterisk being I'm nervous at some point it's going to stop, but who knows when it's going to stop. Next thing I want to do is look at what industries are working the best. You can see there's 146 in here. I don't care about 3 weeks ago. I'm going to go to 2-day force up and see what's working right now. And you can see another evidence of the strength of the market is at 95 of the industries, 94 if we take out this calculated one of the are heading up. So strength: semiconductors, oil, gas, home building, computer storage, system software, communications, internet software. Does anybody then wonder why HGSI stock did so well this week? Forced down. Only one group, which is drug retail. So probably Walgreens, CVS. Walgreens had a big run. Wouldn't surprise me if there's some pulling back there. So more evidence of a super strong market. Now this can rotate and spin on a dime, but it hasn't yet. So let's just take a look at the top few sectors, industries, and see if anything looks good in them. Semiconductors, I own some Hymax, so we'll go down to that one. I bought that after it pulled back in the last week. Just take a look. So, I'm not a big Micron fan. I've been burned in the stock too many times in the past, but it's starting to turn around. You can see the earnings per share growth are going up. Perhaps it's going to start making money, which is a good thing. Pull back to the 50. So I've got a kahuna, a pull back to the 50, DI crossover, predominantly green up here. If you want to get into a semiconductor that's cheap, it has a history of disappointing, but that's a pattern I like. Pull back to a major moving average, and then a sign it's moving, and that kahuna and the DI crossover are right there. Cree, an LED maker, having a very nice run, breaking out to really new highs, or at least recent highs. I like this one. It's got some earnings per share growth. You can see great earnings in the stock here. And it's not up at the top of the high jump. It has DI crossover, certainly a leader. And then Hymax is the one that's got me intrigued. Now, why did I buy this on Thursday? I bought it on Thursday, or Thursday or Wednesday. I bought it Thursday at the close and made a little bit of money on Friday because I had a DI crossover, I had a green candle low the day before, and I had a kahuna. So here's a stock that had a big run up, pull back, running again. I believe the earnings are out, but I would want to be sure on all these everything is green. Anything else on the semis? I don't usually look below the index. I can tell you that Intel had been performing very well in addition to these, but people started coming out with sell ratings as the price has gone up to 24. The next group I'm going to look at will be oil and gas exploration. The one I own here is EPL. I don't know if it's which is down here, but it had, you can see, it was up 8.7 for the week. These are stocks that have been clobbered and are potentially coming back Oil has been resilient. You know, a slow economy is bad for these companies. A falling dollar is good. A strong economy is good. And so they're driven by a lot of other things, as well as supply and demand. And you could see pullback opportunities down to near the 200. And this is PXD has pulled back, moving up, had a gap up on Friday after a pocket pivot and a DI crossover to Kahuna on Thursday. EOG Resources has to get above the 50-day moving average, but you know it has big volume on Friday. Nice gap up there, DI crossover. It's the kind of thing where if it can get and stay above the 50, it might be a nice time to buy. You could see their earnings per share growth has been here and not here over time. Devon Energy. A lot of these stocks are in downtrends, so you need to be careful. But it did break above its 200-day moving average and has been historically a nice play, but negative earnings per share growth. But you see what's coming in down there. I bought EPL not very long ago, and actually this was a good play for me. I make a lot of bad plays, by the way, but it's more fun to talk about the good plays. Where is it? Probably right in front of my face. Let me go back to this. And it really, I think, demonstrates what I look for and why I bought it. Yeah. This is where I bought it a couple weeks ago. And I bought $25 calls because they were $1 in the money, and I paid about $1.50, $2 for them. And the stock is now at 34, over 34. So my calls are now at $9 and whatever you know, premium they're giving me above the intrinsic value. I like buying stocks that have earnings per share coming in, and I love this picture, that pull back to a major moving average and give me a reason to buy it. In the case of this one, I had a Kahuna the day before, and then I was able to buy it this day when it traded up above the prior day high. So the trading above the prior day high was the trigger. The setup was the pullback to the 50-day moving average, a DI crossover, and a Kahuna were the setup, and a stock clearly in an uptrend. That's a totally different picture than those other E&P plays. Now my options are done in a couple weeks, and I'm not sure I'll hold them because getting a 8 or 9x return is always fun. You don't need to hold the stock. It's nice to make the money on the options. Back here, I'm sorry about that. Someday I should just do a call on my biggest mistakes. There's plenty of them too. Oil and gas services, these have been moving up for a while. Take a look at a couple of them. Again, these are other things that have stubbed their toes and are rebounding and turnaround plays. With the gas price resurging, well, I guess natural gas has resurged, and the strong oil, you're seeing a lot of these onshore drillers. There's more activity now in the Gulf and a lot of activity ex-US. So a lot of these guys have moved their equipment ex-US. But you could see here, and we show a weekly, in a downtrend for 2 years. And it looks to me like it's changed its spots. So those are weekly indicators there. So if we look at it where we're sitting, we had a Kahuna, a pocket pivot, everything is green. It's got earnings about to come back into the stock. This is Weatherford International. That looks interesting to me. Oil States International, it's already had a big run. I don't like to chase things. You can see the volume falling back. This is due probably to pull back a little bit before it runs. I'd rather find it then. Schlumberger and Halliburton have had nice runs. Schlumberger, not much in the way of earnings per share growth, but this and Halliburton are the big kahunas here, breaking above the 50-day moving average. You can see the group strength in this line helping to pull the group. I own Halliburton. I've owned it for a little while, and Halliburton is in a very nice move from 30 up to 44. All grain had a red candle high on Friday, probably getting long in the tooth. But like Schlumberger, if you start looking out a couple quarters, it's going to start becoming an earnings grower instead of an earnings contractor. This is, to me, what top-down investing is. Let's see, the next group is home builders. Love them, love them, love them. Eventually I have to stop loving them. Fortune Brands is not what I consider a builder, but they make a lot of the security and other equipment that might go into a home. In fact, it basically tells you what it here, home and security products manufacturer, da-da-da-da. So I'm not sure it belongs in home building, but this is one that made my buy list for this week as well. Great earnings per share coming into the stock. A Bible gap up, a pocket pivot, and a kahuna on Friday. So if I would look at this stock, my personal trading philosophy, I will watch this stock closely on Monday. If the market is up and the stock takes out at least the close on Friday, then I might be interested in getting in this stock. Since I'm going to be on a plane, I might be tempted to put a conditional order in Thinkorswim that says if the stock has a trade above 40, then put in a limit order at XYZ or an option order. If the stock doesn't trade above the closing high because the market is weak, I don't want to be in it. Pulte Home, another one that I've owned since November, I think. Had a nice pocket pivot, closed with the doji, maybe getting long in the tooth. Earnings are slowing down, but still pretty considerable. I think this whole industry is still in the third or fourth inning, not the ninth inning. Beazer did not make money, doesn't make money, but has got earnings and growth coming into the company. Had a great earnings report and conference call, and you could see it's taken off to the moon. KB is another one of my holdings, and you could see, like Pulte Home, pocket pivot, gap up on Friday, everything is green. Like Beazer, though, has not been making money, but is a turnaround play with a lot of profits coming in. So another strong group. So what I basically do is I go through these groups one at a time, and I make decisions based upon the patterns. But what this program has now done for me is brought the best industries to the top, the best stocks in the best industries, and I'm really only looking at those above the index. Now, I own Seagate. Western Digital had a great week as well. Those two guys, you look at their earnings per share growth, it sucks. By the way, that's a very important medical term and not slang. But I think part of the story is they've taken out competition, and the floods in Thailand that hurt them are long gone. And so we'll look at that one. I found NetApp to be sort of intriguing. So Seagate I wouldn't be buying now. In fact, I'm thinking of selling now only because it doesn't usually get this far away from its 50. And as you can see, it's had a tendency of coming back. And I've made money on a couple of sell it and then buy it back cheaper. But it's pretty strong with a Bible gap up day, another gap up, everything's green, a kahuna on Thursday. What I don't like is the earnings per share growth. What blows my mind is I get a 3.7% dividend. I bought it down here. I had a bigger dividend and a multiple of 6.3. So this is a value play dividend story. Right now there's growth. I just don't understand the growth in the company. NetApp, yeah. This one is I'm itching to buy. And let's go into, usually I do this earlier, those who've been on the calls before know how much I like MarketSmith. And I like MarketSmith as an adjunct to HGSI. And I like MarketSmith. And see, I told you it would be a short one. I'm already going too long. And I like MarketSmith because it does a great job of getting the earnings. So while it's loading up here, here it is. can't remember now. NetApp is NTAP. So remember, pocket pivot, breaking above the 50-day moving average, DI crossover, Bible gap up, everything is green, and a kahuna on huge volume. Hello, all the things that I like, and I know where to put my stop. That's why I like it the most. Now, the bad news is, let me get, before I look at that, say something, hold on. Unlike, there are a ton of shooting stars on Friday. This is not a shooting star. You put your stop perhaps below the close of these two here, so a little bit below the moving average. Look at you've got tons of earnings, although not earnings per share growth. If it gets a multiple of 15 and it sees next year 254, that's 37.50. So that's not a big move from here, but I just think this is setting up. And I look in the back, I look at higher multiples that the stock drove. I find this an interesting play, perhaps not on the fundamentals, but rather on the confluence of positive momentum indicators closing above the 50 and the fact that I can put my stop, here, about where my that line is, and I'm not risking much more, probably risking about $1 on this trade at the most. And I think to get this to go back up to here would be my short-term target, so I was looking for $2.50, $3 for the one. Now that may not be enough for some people. I just get the sense that something is changing with NetApp, and maybe we're about to see the stock start to run. And then again, I don't know anything. System Software Index, who would think that Microsoft is leading the way, but they've got a new Xbox coming out. They have a bunch of upgrades from analysts. They're going to shut down the Windows RT and put Windows 8 on some of those iPad-like tablets. And what a great story here. Pullback. There you have two kahunas, pocket pivot, a Bible gap up, and a 10% run since that time. Pays a dividend, sits on a lot of cash, Apple, and it's been a long time since Microsoft has been a cha-cha-cha. Communication equipment. A big winner here was Procera. This is a stock that's been in a downtrend and had a Bible gap up. Excuse me, it had a gap up. It was below the 200-day moving average, which is why I don't think it was viable. So ignore that being red. It had two huge volume days on up days in the last 2 days with kahunas, a DI crossover, everything's green. Their earnings came out. I didn't hear their conference call, but I would wonder if there's not something going on, like, are they going to start to make money? Yeah. Hello. Turnaround, 13 up to 44 cents, 238% growth. Seems like a pretty big PE, 50 for a stock that's contracting, so they must be looking forward. 50 times 44 is $22. So that would be a 50% move from here. Now I see why it gapped up. It'll have to get above its 50-day moving average, excuse me, its 200-day moving average, and it might pull back to the 50 before it runs again. But that's a leader in this group. Anything else that looks interesting from my top-down approach? Integrated oil, still getting up here. That's kind of shocking. So I will do this, and then I will build a watch list. And every night I go through at least the top 10 ups and the top 10 downs. Now, how do I supplement my watch list? On a nightly basis, I'm going to do a group inclusion report. So I'm going to demo that for you right now. Designer. In the designer are a thing called smart groups. These are pre-done searches, and I'm going to key on the searches that are Morales and Katcher and Woodward and Brown. I'm going to go in here, Tools, Group Inclusion Report, and hypothesis is if a stock these lists, unless they're bearish, include very strong stocks. That's the purpose of the list. If a stock is found there in multiple lists, does that mean it's an extra strong stock? That's a hypothesis. So in HGSI strategies, Morales and Katcher, let's include Bible gap ups and pocket pivots. In HGSI, we'll go into Woodward and Brown here. So we want the best of Woodward and Brown. We want best criteria. We want ERG 240. We want growth stocks, HGS 100 leaders. Quarterly EPS, stocks and groups moving to the upside. EPS growth striking a 52-week high. And we want to make a group from the report. We're going to call it, as always, AAA Web Gems 5513. I want the top 10 stocks. I'm going to hit OK. Don't really care about making an index from the group, so when it comes up and asks, I'm going to say no. Now I'm going to get an HTML file. So these are the big leaders. So now what I do is I go down into my user group and I find what I just put together right here, which turned out to be 9 because there must have been 3 tying for 11. I'm going to go into the warehouse view, and I'm going to look at these one at a time and then probably say goodnight. Hold on a second. I did one of my cardinal sins. We take off. All right. So number 1 was Webcom. This is a stock that I've owned in the past. This was one on my buy list for this week, which I'll share with you before we're done. Bible gap up, Kahuna, huge volume. It did close midway in the day, so I've got to see it trade up from here. Everything is green. What I really liked about this one is, and I'm an earnings monger, why buy things without earnings when I can get earnings? Look at the earnings, 20%, 27% growth in a market that doesn't have a lot of earnings growth, twice the multiple. It would not, even if it doesn't grow the multiple, but hits the 243 next year, that's up from 19 to 24. Why shouldn't it get multiple expansion if it's growing this much faster than its PE? Doesn't always get a lot of respect in the market, which is why I haven't owned it, well, I haven't kept it. Regeneron, big, big leader. We go back last week, we talked about how it was going sideways to the 17. Might be a good place to buy it, and it took off from that point. Big move, one of their potential competitors failed in trial, which makes clear sailing on their eye drug. Now, this looks like an expensive stock, and how can you buy stocks that are $260 a share? Isn't it too expensive? Who knows if it's too expensive? You have to look at things like multiples, earnings per share growth rate. So here's a young company with powerful earnings per share growth that trades less than its long-term earnings here. If you look at the weekly here on MarketSmith, you can see the range of multiples has been 26 to 403. So it's had a long run, and it's clearly expensive, at least from a price. But I mentioned last week, I heard someone say on one of the news shows that probably Kramer, that someday we'll look at Regeneron, Gilead, Celgene, Pharmacyclics, maybe even Amgen, who are all very expensive, and say, boy, they were really cheap back then. I think this is in the midst of a very powerful long-term bull run. CalAmp, I don't trust it with the earnings here, but it had a nice pullback and took off over the last couple of days. It made my list last week because it broke, and I showed you that earlier, so you know I'm not making that up. DI crossover breaking above the 50 with a big kahuna in volume, and it would have run up about $2 had you bought it on the open on, or at least $1.50 on Monday. Perion Networks, we've already saw this one. I think these are the IncrediMail guys that Google just signed a 3-year contract with. I guess I own this one because I wonder if Google just doesn't buy them out one of these days. It's an Israeli technology play. What a nice deep scoop here, and it looks to me like it might be getting ready to break out. Bible gap up, kahuna, huge volume on Friday. Ryland Group we already looked at, top down, home builder, nice move. We looked at some great earnings per share growth, trades at a multiple of 35 and grows at a multiple of 300. That's kind of a discount to its growth rate. which is the kind of thing I like to look at when I buy stocks. Trex have been pulling back to the 50. I missed the opportunity here where you had a kahuna coming through the 50, and it's probably still not too late. All green, Bible gap up, pocket pivot, kahuna volume with earnings coming out and beating earnings on Friday. I like it even though it's had a Bible gap up because it's really still pretty close to a squeeze here of those moving averages. So it was a mobile breakout to the upside as well. Mercado Libre, I guess this is the eBay of Latin and South America. I've been burned on this one in the past. Clearly in an uptrend from 69 up to a little bit over 100, had a pocket pivot on Friday. Everything is green. Big volume came in. Don't know much about the stock anymore. Fortune Brand Home Security, the one I thought was misbranded being in the home builders, but what a lower left, upper right Bible gap up. Now, is this a Bible gap up climax run at the end of a long run? Maybe. However, when I look up here and I see this kind of earnings per share growth, I just got to go look at MarketSmith, FBHS, and what I see here is, you know, it's got good earnings per share growth, probably a decent multiple. It's probably getting where it's fairly priced, but if this market keeps moving, this keeps going, and you can see it's not quite up at the highest point of the high jump. SodaStream, I don't get this guy. Why do I want to make soda in my house? I guess if I was greener. I've missed it several times. Pocket pivot on Friday, everything is green. And that's it for the top 9. I'm going to show you what I'm looking at going into Monday, and then I am going to say goodnight on what was supposed to have been but really wasn't a shorter program. So I put these in different categories. And so when I looked at some of the Bible gap ups that looked interesting to me, Webcom, Fortune Brands we looked at, NetApp we looked at, American Axle, some of the automobile supply companies have really been beaten up and down. And this one looks like it might be ready to make a difference. It's got great earnings coming into the stock. And it, you know, I bought it a long time ago, and I don't know why I still have it, but it's finally back to where I paid for it. And I look at the earnings per share growth, and I see a lot of opportunity there. Breakout EPS All-Stars. These are all companies that have very good earnings per share growth going forward. Interestingly, their EPS rank, which is backwards looking, may not be as good as it is going forward. Some of these are young. Headwaters, don't know much about this guy. So I put in a couple requests to management at high growth stock. I would love to see here listed its earnings date. It's listed, you can find it in the data. I would also like to see, instead of just 2 quarters, can I get annual and maybe the second year out, and all depends upon the data resources that HTSI has. So Headwaters Construction Concrete Products, so it's like EXP. All green, pocket pivots, kahunas, volume. But what really got me interested was when I saw this is what's called a turnaround play. It's gone from a loser to starting to make some real money. And in my experience, stocks take off when they start to make money. And I mean, there's probably some of it already in the stock. And you could see on the monthly, the stock was up around 40. It trades now below 12. It's got a market cap less than $1 billion, so it's a small company. But if it is growing at 92 times per year, will it get a multiple of 30, 40, 10? I don't know. But I like the earnings per share growth turnaround play, and that's why it made my list. Back to my list. Leaders extended or gone are stocks that are in the midst of a long run. Sherwin-Williams, probably nothing that better defines what a great long run looks like, more so than Sherwin-Williams. I've been in and out of this. This is one where I'd like to give myself a electric shock therapy for ever selling this stock. I don't know what I was thinking. This made it to an E-index probably 2 years ago. This is the definition of, let's put it on a weekly. Of the lower left, August 11, $72 stock to 189 2 years, less than 2 years later. What a big mover, what a monster, and what still makes money and continues to take advantage of the housing recovery, I suspect would be the reason. Still like that stock. Hertz and Avis leading the truck group. Walt Disney, another one that I was fortunate to have gotten into recently. I own a lot of stocks, by the way, so part of why I have a lot of these is I have too many stocks. But I automate the stops so I don't get too nervous about having too many stocks. But look at this run of Disney. Breaking above the 50, he had a squeeze here with the MOBO breakout here. You see the 8, 17 to 50 all coming together. A green is a eureka in the market, so the market turned around. So that is in December, right before the beginning of the year. 12/31, you had kahunas coming in a big run since. In this, I don't want to be in it for too well. I won't say that. I'll get out of it when I get out of it. Pays a small dividend. Pullbacks ready to run are stocks that have been in uptrends that have pulled back. We'll look at let's look at URI and EXP as examples of stocks that I think are still viable. I own URI. I do not currently yet own EXP. I've owned it off and on. So United Rentals is a company that struggled after an acquisition, has got decent earnings per share growth. It trades at a multiple of 14. This is the one I own, and my guess is this is about to start another leg up. They took out one of their competitors. They had a little, look at the earnings per share growth here. So it could get to $6 and trades at 13. That's $78. But why would a stock that has this earnings per share growth not necessarily expand its multiple? So we'll see. I think it's cheap stock if it makes this number. And it's gone sideways. Pocket pivot, kahuna, DI crossover. Those are 3 things that I like to see, or 3 of the things I'm interested. The other one that I picked at here, and I know I'm getting old because my memory was EXP. They make cement and other building materials that are used in a lot of these houses. It's pretty much gone sideways, really for the whole year after a big run-up in 12. All of a sudden, I got multiple days of kahunas, pocket pivots, a DI crossover. The short term is green. The long term is still red on the bongo. I like this. This is another one I'm interested in getting in. I'm mad at myself because I looked at it over the last 2 weeks and I passed on it. But it's not to say I didn't find other things to buy. And then pullbacks waiting on a signal. I'll pull out USG as my example there. These are stocks that have pulled back, and I'm waiting for a clue. So in USG's case, it's now in a triangle forming between the 50 and the 200. It had a DI crossover. If it closes above the 50, I'm going to get real interested. This is another turnaround play where it was losing money. It's called US Gypsum, also involved in building homes. They've had some litigation issues, but it's in a, I am not going to be in this stock until something declares itself in here and here. It's going to bounce back and forth, and if it breaks above this, I'm going to be interested because of the earnings per share growth. Well, I went much longer than I thought I would go. Hope you guys don't mind too much, but I tried to give more meat and less potatoes tonight. So on that note, I think I'm going to say goodnight. Hope you all have a great week. And if you didn't see last week's and you need more basic training, you don't have to join the Army. Just go watch last week's video as I go through stepwise what I'm doing while I do it, and you might get a better understanding. Good night, everybody.